Okay, so I'm glad you can both hear me. So we'll kick off. We're just going to get ready for the news copy. Oh, I can't even hear myself, but that's okay. All right, so let's just start as usual with the economic calendar. And like I said, if you stop hearing me, let me know. Okay, actually, before we start, yesterday, something interesting happened yesterday because, that's why I said it's always important to note reports of medium importance because sometimes some of these reports of medium importance tend to be of high importance. So yesterday was a very good example. So yesterday, Thursday the 4th, as you know, we had at 12 noon Rwandan time, we had the Euro area unemployment rate. So it was classified as a medium, but of course, unemployment rate is a report of high importance. So again, that's just to highlight from yesterday why it's important to check reports of medium importance so you don't get caught out. Excuse me, sorry. Okay, let's get back to today. So today is the last day of the trading week, Friday, 5th of March. And as we already know, we have the US unemployment rate coming out shortly in about 10 minutes. That's the US unemployment rate and non-farm payrolls. This is a report that comes out on the first Friday of every month. And it's a report of huge importance that affects all markets. So all stock markets in the world, all financial markets, bond market, stock market, all currency pairs, all markets are affected by this report and it's highly anticipated. So there's always a high probability of the markets trending sideways all week. So like we said, this week is a good example where you definitely want to only have one attempt at the market every day leading up to today, Friday. And of course, today you just avoid trading till today. So that's what we've done. We've avoided the market prior to this. And we just will now assess the market and get ready for the reports that will be coming out shortly. So looking at the charts, you can see where the Euro US dollar fell yesterday, then started trending sideways, fell a bit, trended sideways, and you can see the sharp fall and is now trending sideways again. So it's currently trending sideways between these two white lines. And of course, this is S1, and that's S2. So you can see S1 is clearly within the sideways trend. Oh, congrats, Paula. So yes, the US is just, the Euro US is just trading sideways along S1. So S1 is within the sideways trend. And again, it's a good example. You can see the sideways trend has formed the market resistance here, but because it's very close to the market, it's too close to use just before the report, because when the report comes out, there could be a bit of volatility with the market going up and down. So this is too close to the market to use this as an entry point. So although the market has formed a market resistance, we're not going to use that at the moment to trade because it's too close to the market. So the first available place to trade with the pivot point to buy. And of course, the market here hasn't formed the market support. So there's nothing you can do. So number one, you can't use this S1 because it's within the sideways trend. The market itself hasn't formed the market support, so no entry point there. And then S2, you can't use S2 to trade using the pivot point strategy. So there are no sell opportunities. So the only opportunity is just to buy just above the pivot point. So like I said, the pivot point there is 1.19996. Just round that up to 1997. So 20 pips, 2 pips above that will be 1.1999. 1.1999. So stop loss 1.1979 and take profit 20 pips above. Bring out the calculator. That's 1999 plus 60. So that's 2059. 2059. 1.2059. Okay, so like I said, unfortunately, that's the only opportunity to trade now. The market resistance is too close to use as a possible entry point. If the report comes out and the market initially falls, if the market falls and moves clear away from the market resistance, then we could probably move our buy order from just above the pivot point to just above the market resistance. But for now, it's too close to use. So that's the safest place to put it for now. And like I said, no sell opportunities. Well, I hope you all, I hope you can all still hear me. Any questions?
No, that's fine. I can hear you, and it makes, yeah, and it makes sense.
Oh, congrats, Bola! You finally got your 60 pips.
Yes, I did yesterday. No, I think it. Yeah, is it 60 pips or 30 pips? Because I'm dealing with 50p.
Well, you made £30, but you got 60 pips.
No. I'm still on the £30. I'm still on the 30. I haven't had the stomach yet for 60 pips.
No, what I'm saying, you got the 60 pips, but you're doing 50p.
Oh, yeah. Sorry, I got the 60 pips. Yes, I got you now. Yes. yes, for the very first time. And on that note, I'd like to ask you a question.
Yep.
So whenever you trade, whenever your trade goes into the live trade, when the market closes, you always say that you're going to leave it to run to the next morning.
Yeah.
Now, before I've done that a couple of times, and it was giving me sleepless nights, but I think I've got I've now got used to the idea of just leaving it to trade. But when I did it last week, the following morning, I woke up and I closed it out at about 10 to 6, because my thought was that the market sort of opens properly at 6 a.m. But when you say you leave your trade to run, do you just leave it there? And then if you want to place another order, can you place a pending order while a live trade is still running? How does it work?
Yes, you can. In fact, that's exactly what I've just done here, because you can see already, I still have the live sell trade from yesterday.
Okay.
So you can see it's still there. That's the one that's here.
Right, okay.
And I've just placed this buy order here. So you can see I've got the live sell trade and I've got the buy trade. So yes, you can do both. Just so long as you know what you're doing. So you can see there are too many lines on my chart.
Yeah.
So long as you don't get yourself confused.
Okay. No, that makes sense. Yeah, that makes sense, because I was wondering, I was thinking, do I need to? So I closed it out, but that makes sense.
Yeah, I mean, basically what you're trying to say, let me just explain that a bit further. What we're trying to say is that when you enter a live trade and you're putting your stop loss, your profit limit, that trade, your decision on that trade is separate. It's a standalone.
Okay.
So if you now want to place another trade, you're going to assess that new trade on its own merit.
Fantastic.
So so just like me now, this sell trade from yesterday, I let it run into today. Today, when I saw the market was still falling, I just removed my take profit and let it run a bit. And I've now put my stop loss around the 60 pips point. And let's see what will happen. But that's just me deciding on this trade. It has nothing to do with my idea of what to do today for the trade.
Okay. So I'm going to ask another question. So does that mean that you can be running any number of live trades as long as you can understand your system?
Exactly. Because if you go back to, that's the beauty of trading. So if you go back to And again, this is for everyone else who hasn't yet watched it. If you go back to our money management part 2 session, if you watch the recording again on the platform of money management part 2, where we said you can really trade as many markets as you want. It's only your capital that will depend on how many you can trade at a time. But yes, technically you could have 20 trades running at the same time.
Wow. Okay. Okay.
It just all depends on how much capital do you have, how much do you have in your account. So let me be crazy. So let's say, for example, you had £500,000 in your trading account. You could literally have 20, 30 markets trading, doing 10p per pips on each of them, probably risking £10,000 per trade.
Yeah.
So yeah, it's all, again, that's the beauty again of trading. And that's why I said money management is the most important part.
Okay.
Because once you understand money management, you can do what you like. So let's say, for example, now, you're doing 50p per pip. Isn't that right?
Yes, that's right.
So technically, you can split that up into 10p per pip and do 5 markets.
And then kind of, okay, so you could kind of increase because we know there's a 60% charge that you're going, 60% chance that you're going to lose money, but you can also, so basically you're increasing your potential of making money.
Yes, but it's all still within your money management.
Yeah.
So you're right. So now you could just say, okay, instead of doing 50p per pip on Euro US dollar alone, I'll do 10p per pip on 5 different markets. So even if you lose out on all the 5, you've only lost 50p per pip.
That's right.
But the key,
that's right.
But the key, again, this is just for everybody else. Make sure, for those who haven't watched, or if you want to watch it again, is there. Watch that session on money management part 2. So yes, so long as all is within your money management, you can do what you like. And so long as you don't get yourself confused, when you now have 5 different markets, you're going from one market to the other market, which stop loss, what is going on. So but yes, technically, if you know what you're doing, you understand your money management, you can trade as many markets as you want.
So for this live order that you've got running now, so you've taken your take profit off, but what you are doing, I'm going to make an assumption here, is that every so often you will look at it and move your stop loss. So in other words, so you have an idea, so as the thing keeps going up, you still keep moving your stop loss until you reach a point whereby it will kind of drop back to where your latest stop loss is?
No. This is just me trying to milk the market for as much as I can. Because you can see now, instead of 30 pips or 30 pounds, I've made 40 and counting. Now, now the report has been announced. So you can see the report has now been announced. So if the market continues to fall, for the rest of the day, I'll keep on making money.
Oh, right, yeah, because it's been announced, because I saw that drop. Yes, it's dropping now, and yes, and it's, wow, I can see that now, Yeah.
So, this is sometimes as a trader, and actually you're a very good example, Bola, because of your experience now. Because you can see that when you trade, there are more bad days than good days.
Absolutely, yeah.
So sometimes, I guess it just comes with experience. I've just been, sometimes you want to maximize your profit when you can. So you can see now.
That's interesting,
So you can see now, let me bring out the notepad. So you can see I entered at what, 2020? 2020. But I've moved my stop loss to 1963. 1963. So I've locked in that difference. So that's 2020 minus 1963. So I've locked in 57 pips. So no matter what happens, I'm going to make 57 pips.
So,
but I was just going to add something else. But the reason why I put my stop loss here is what we call a technical stop. I put it at this high point here.
Okay.
That's what's called a technical stop. Now that the market has fallen, I'm going to now move it to the market resistance here.
Right.
So
Okay.
1945, 2 pips above
Okay.
that, 1945. So if the market goes back up now, I've locked in how much? 1945. So that's 2020 minus 1945. So I now have 75 pips.
Mm.
So again, it goes back to what I was saying. But again, this is where the beauty of trading is that once you know what you're doing, you can start to play around with it and mix it up. But you need to be sure of what you're doing. You need to be comfortable with what you're doing. Obviously, you did the right thing. You took your 30 pips. You went away. The market could have gone against me this morning, and I could have not made anything.
Yeah.
But again, this is what I'm saying. You always have to be happy with what you're doing and prepared to be prepared for the downside. But again, I always weigh that up with the prospect that, as you've just found out yourself, you're not just going to be making 60 pips every day. So the days like this
is really interesting. Yeah.
So
I mean, I can,
just let you run.
Yeah, the market is, yeah, I can see what you mean. I think what happened for me and why it took me, because at one point, because I didn't go to bed till very late last night, but it wasn't because of this, I have to say, not like I've done, not like I did it before. But when at one point, it was just trending sideways, and you could see that the market was not really moving anywhere. And I thought, well, you know what, the market's kind of closed. So that could explain the whole slow sideways trend. In fact, I was very surprised when I came down and I saw they had taken my order, because it trended sideways for quite some time. But then again, I suppose the market has woken up this morning and the activity has kicked up again. Okay, so now I can understand now why you let your trades continue to run. It makes sense. Okay, yeah, definitely. Thank you for that, because I've definitely learned something more.
Yeah, pleasure. And because, yeah, and just to add to that too, is that you find that that's one thing I learned very early on with trading, is that I never assume anything with the markets anymore. I quickly learned that. The market can be quiet and then all of a sudden it can shoot 100 pips. So, and that's why I said, when I'm in a live trade, I just leave it. It will either get to 60 pips or it won't get there. Whether it's going there slowly or fast, I don't bother. I don't try and assume. I just leave it alone. I let the market decide what it wants to do. I think early on in my trading career, I came to the acceptance that once I have gotten to the stage where I've moved my stop loss and I'm not risking any money, from then that point on, I am fine.
You know, you said that you've now got 75 pips. Are you able to work out, because obviously from the last session that we did, we said that when you move your stop loss, it doesn't mean that what you see, the counter, what you see, the 57, but that's not what you've got.
No.
The money that you've made is the difference between your stop loss and your opening.
Exactly.
Are you able to work out how much that actually is?
Yeah, that's just 75 pips times 50. Because I'm doing 50 p per pip. So I'm doing 50 p per pips, so that would be times 50p. So that would be 75 times 50p. So, well, you have to now divide by
100, I think.
100.
I'm not a good mathematician, but
so that's 37 pounds 50.
Okay, so regardless of what goes on, you know that you've got 37 pounds 50 banked.
Yeah, exactly. But what I was saying, and in fact, what you said is correct, because right now, you can see in my trading account here is showing 56 pounds. So this is the only guarantee I have, is that I'm going to make 37 pounds 50, not 50, not 55 pounds that is showing.
Yeah, exactly.
Yeah, because this is where my stop loss is 1945.
Yeah. Okay, that makes sense. Okay. So I think, yeah, okay, I like the idea of, and now I understand the whole logic behind letting it run and then making an assessment and saying, okay, where is it right at this moment? And then where can I move my stop loss to, whereby I'm happy to say, you know what, if it drops and it takes me out at this point, that's fine. I'm okay with that. C'est la vie. Okay.
Exactly. That's the key, that you shouldn't cry after a decision.
Yeah, absolutely, absolutely. No, I'm learning that a lot with this now.
Because don't forget, sometimes I made zero where you closed out your account. Remember, you took your 10 pips or your 15 pips, and I made nothing.
Yeah, yeah.
So you can see it swings in roundabouts.
Yeah, yeah.
So so the time you made your 15 pips and I made nothing, I did not cry because I was willing to accept that. So that's the key. Don't think it will always go your way. If it doesn't go your way, just make sure if you cry, they don't do it. Just
no, oh no. To be honest, I've realized now. I thought I surprised myself. Now, before I used to, many years ago, I wouldn't have been dabbling in all of this, but now I don't want to say that I see it as a game, but I do enjoy it, even though I'm losing money many a time, but I do enjoy it. I don't know. Maybe there is a bit of a gambler in me that enjoys the thrill of it. I don't know. But
no,
hey.
which is good, because you need to have a high risk appetite to trade anyway, to start with.
Yeah.
Like we said, if you're not prepared to lose money, you shouldn't be trading, because losses are guaranteed as a trader.
Yeah.
But the good thing I like about what you are doing is that, number one, you're not letting the losses bother you, and number two, you're beginning to learn from your trading. You're beginning to learn on a day-to-day basis. You're beginning to get more and more experience in what you're doing. You're beginning to get better and better at what you're doing, and all that adds into you becoming a good trader and making good decisions along the way.
Okay. Thank you.
Pleasure. Any other questions before I go and rest my voice? For those who've just joined us, I've lost my voice, but I'm well, so don't cry for me. I am in good health, and I'm very well, but my voice has just gone on holiday and left me behind. Any other questions? Oh, actually, before we go, sorry, Abimbola, before I take your question, I was just saying that this is now a good time to move our pending buy order to buy just above the market resistance, because you can now see the market has fallen, broken S1, broken the sideways trend, and also broken S2. So now you can see we can now use this market resistance to buy. So you can see here where the market got to that high point there. Let's do it properly. So you can see the high there. If you look at the data window, is 1.1942, and then the high there again is 1943. So it's just 1 pip difference. So that's a market resistance now. So we couldn't use it at the time because it was too close to the market. But now that the market has fallen, we can now move our pending buy order from just above the pivot point to now just above the market resistance. So let's do that. We'll just modify that. So we change the price to 1.1945, stop loss 1.1925, take profit will be 1945, 1945 plus 60. So 2005. 1 point. There we are. Okay, so so you can all now move your pending order from just above the pivot point now to just above the market resistance. So again, this is the thing about trading. Trading is dynamic. Things can change. Where you place your pending order can change. It all depends on what's happening in the market. Because that's one thing I always warn people, that when you're trading, the market is not static. You know, the decision you make now can change, as you just seen now. We made a decision at just before 1:30, and 10 minutes later, it's changed. Okay, sorry, Abimbola.
Sorry, Bola has asked more of the questions that I had to answer.
Yeah, I think she's asked all the questions.
Okay. I heard you moving your order. I heard your order.
I'm trying to do so many things at once. I'm just about to go to a meeting, and then I don't want to miss my order.
I had it been accepted.
It is. I hope you feel better soon anyway.
Well, like I said, I'm very well. It's just my voice has gone, but I'm very well. Thanks.
You're welcome. Thank you.
Okay. But I definitely need to go and rest my voice. I'd stop talking. Okay, so we'll catch up on the platform, everyone. We've made our own decision. We know where we're going to buy. There are no sell opportunities, and we'll let the market decide. And we'll catch up on the platform. And if we don't speak, like I said, do have a wonderful weekend, everyone.
And you too. We wish you a better voice.
Thank you.